Live from Sydney, I'm Paul Allen. This is Insights, and we're awaiting the policy decision from the Bank of Japan due imminently. Here are the other top stories. Asian stocks rise and the dollar weakens against emerging market currencies as global investors seek a rotation out of US assets amid policy unpredictability and geopolitical risks. In fact, the rush into EM funds is at a record pace due to cheaper valuations and stronger economic growth in Asia. We'll assess that with our expert guests. TikTok and its Chinese parent ByteDance closing a deal to transfer parts of its US operations to American investors, securing the app's future there and avoiding a ban. India was among the countries invited but absent when President Trump unveiled his Board of Peace in Davos. Pakistan, though, showed up, signalling its growing closeness to the US. And we'll discuss India's challenging ties with the US and its current global standing with INSEAD Professor of Economics and Political Science, Pushan Dutt. We have Asian markets rising to close out the week as upbeat US economic data and easing geopolitical tensions help to lift sentiment. The weaker dollar also pushing gold to a fresh record high, closing in on the key psychological level of $5,000. We're also watching Japanese assets as we await the latest Bank of Japan rate decision. Now, that decision due imminently. We are, of course, expecting no change to the rate, but we're very closely watching for any commentary, particularly around the behaviour of the bond market that we saw earlier this week, and also any implications from the upcoming Japanese election. We are expecting to have the Diet dissolved in Japan today, which sets the scene for a 16-day campaign, the shortest in Japan's history. Elsewhere around the region, though, broadly risk on. We've got the Kospi better by 0.8%. The Japanese yen still very weak at 158.57. And take a look at silver. I mentioned gold. Silver now knocking on the door of $100 an ounce. Now, the Bank of Japan's messaging is going to come under intense scrutiny when it releases that policy decision due any moment now after Prime Minister Takaichi jolted financial markets by pledging to expand fiscal spending. Now, let's have a closer look at the wild ride JGBs have been on this week, including the 40-year yield topping 4%. Let's get to our Bloomberg MLive executive editor, Mark Cudmore in Singapore. So, Mark, obviously the commentary here very keenly awaited. What will the market be hoping to hear?
So, as you kind of highlighted there, the decision from the Bank of Japan that we're expecting imminently won't be the exciting bit. It's the press conference that comes later on today. The really key thing will be whether Governor Ueda can show some support for the bond market, however that gets measured in terms of purchases. But there's quite a lot of flexibility in what he can do there. The risk is today is that we get a repeat of December, where ultimately the dovish tone saw the yen continue to sell off. And I think that is the backdrop going into this meeting. People are very focused on dollar yen, but you've got to remember that the backdrop here is a weakening dollar broadly. You talked about dollar yuan there in the lead-in with the fix below 7. Dollar is very, very heavy, and yet the dollar yen is higher. And that is the point, that yen is underperforming massively on crosses. And I think that is the real sustained trade, probably, unless Ueda really surprises today, that the yen will weaken on crosses. That's not a view on dollar yen itself.
And what about the bond market? Is there any risk that we might see another wave of the sort of selling that we saw earlier this week?
I think absolutely. I think it's a very high risk. We've got a 40-year auction next Wednesday, and the auction itself may go well, but it's in the secondary market that we risk some problems. We saw that dynamic earlier this week with the 20-year auction, where the auction itself passed off fine. It wasn't great, but it was fine. But then it was after that we really saw the market sell off. And one of the things that this week emphasizes how little liquidity there is, how little trading there actually is in this long end. So the long end JGB market, that now that it has become unanchored over the last year or so, can really swing about quite aggressively. fundamentally. And ultimately, there's no reason to change the trend. We've got a massively indebted country that's planning to fiscally expand even further, despite very sluggish growth and poor demographics. So the long-term trends of JGB weakness and yen weakness are very, very strong fundamentally. It's unclear whether today's BOJ is going to be the catalyst, but I would suspect that the long end will continue to weaken again next week, especially around that 40-year auction.
Yeah, talk about the amount of debt. I mean, I think Japan's debt to GDP ratio is something like 230% now, which just is extraordinary. But as many commentators point out, a lot of that debt is domestically held. But at the same time, we heard this week the BOJ holdings of JGBs is at its lowest level now in about 8 years. So at what point does this debt burden actually become a point of concern?
It's a really good question. There's two ways to look at it. It's not a default problem. As you say, it's almost all domestically owned, or very largely domestically owned. But what's going to happen ultimately here is Japan is going to have to, over time, monetize that debt burden. What they're trying to basically disappear it by basically having deeply negative real yields and hoping that growth outperforms what they need to pay in that. And overall, they've been managing that system well over the last 4 or 5 years, but ultimately that involves a much weaker yen. So the massive depreciation we've seen on the yen on a trade-weighted basis over the last 4 or 5 years is set to be an extremely long trend. It doesn't mean that you can't have a 6-month period of yen appreciation, and that may well happen at some point if the BOJ or the MOF do something dramatic in either the yen or the JGB market. But the long-term trend for yen depreciation against global peers is very firmly entrenched, and that's not going to change. So when we talk about Japan's debt problem, that's where you see the problem, is that their only way to manage this exorbitant debt pile is to monetize it via their currency. It's not about defaulting because it is yen-denominated debt.
That said, can we anticipate more intervention going forward? I mean, where's the floor for the yen? Much longer term, I don't know where the floor is for the yen. I think yen can continue to depreciate significantly over the coming years, given the fundamentals and the demographics there. I don't know where the floor is, but I think it's about a pace thing. Can we get intervention? I'm not saying intervention is likely. I think the bar for intervention before the election is very high, and I think that they're going to be helped by the fact that overall this year we should continue to see a weaker dollar. And as long as there's a weaker dollar yen won't be at problematic levels. And that's the most important exchange rate for people watching in financial markets for this intervention level for many kind of Japanese companies. Sure, trade with China is becoming increasingly important, and with Asia overall is kind of dominating the whole US trade. But ultimately it's the dollar yen exchange rate that people are looking at. So as long as the dollar remains in a weakening trend, we may not see intervention. We may not need to see intervention because yen weakness will be disguised by dollar weakness. All right, Bloomberg M Live Executive Editor Mark Cudmore there. Let's get some more on the BOJ policy decision and what it could mean for markets. Hiromi Ishihara is Head of Equity Investment at Amundi, Japan, joins us from Tokyo. And it's perfect timing, Hiromi, because we've just had the decision, so you're going to hear it at the same time that I do. As expected, the rate unchanged at 0.75%. The BOJ saying the real rate is at a significantly low level. Got some GDP forecasts here as well, 0.9% versus 0.7% previously. And the Bank of Japan saying it will keep raising the rate if the economy and the price outlook is realised. And that might be a good place to start. I mean, we've got some inflation figures today which suggest inflation's still running pretty hot in Japan. Do you feel like the Bank of Japan is tightening at an appropriate speed?
So we definitely need to monitor what Governor Ueda say this afternoon in the press conference, and then monitoring the language that he's going to use about the persistent inflation. The market overall, we expect the underlying inflation is going down this year. However, as we have seen the weak, consistent weak Japanese yen, would add the extra pressure on the inflation late this year. So yeah, definitely the BOJ is monitoring how the currency moves as well as the inflation, and then if the inflation actually accelerates, that could lead to next step for BOJ.
Well, we also have another wild card in the mix because in, I believe, 16 days' time, Japan is going to go to the polls. I just wonder what your predictions are around that election. I mean, can you count on the certainty of a Takaichi win? And if so, what's that going to mean for fiscal policy?
So there's a little bit difficulty to foresee the election results, but the market is pricing in mostly the Takaichi going to win, and LDP can manage to secure the majority seat of the House. That would secure that Takaichi actually can implement all her pro-growth policy statement, but of course that raised the market concern of fiscal stability. So I think the best case is the LDP winning the majority, and Takaichi will continue to learn the cabinet. But the worst case that we see really fragmented the lower house election result, which create more uncertainty over the policy direction.
Well, let's work with the hypothetical of a Sanae Takaichi victory. She gets back in with an enhanced mandate, and certainly opinion polls seem to be reflecting that at the moment. That would mean that we see some of these policies enacted, such as a suspension of the sales tax, a more aggressive fiscal spending. Do you think that that's going to move the timeline for the Bank of Japan? And are we going to hear anything about that today?
So certainly, if she wins the election, that enable her to accelerate her policy implementation, and then definitely, as you described, VAT cut for food for 2 years will be on the agenda. But she was clearly saying that this tax cut will not be financed by new bond issuance, but she doesn't describe the clear source of financing for that. So that would raise, of course, the concern over the debt in Japan, but also I think the government is clearly monitoring the currency volatility. So she would be, I expect that she would be really careful on how she actually navigates this her pro-growth policy going forward. And then BOJ would also really be careful, and then at the same time flexible how the policy is actually implemented going forward.
Yes, and on the point of foreign exchange, we're getting a few more lines from the Bank of Japan decision here. It's saying that risks to the outlook include financial and foreign exchange markets as well. And of course, the yen is at very low levels at the moment, 158.66. Where do you see the currency heading from here? And do you have any concerns about the weakness of the yen at the moment?
So overall, Japan equity benefit from weak yen. However, I think what we have seen right now, the level is a little bit excessive. It's really difficult to explain by the gap between U.S. rates and Japan rates. So certainly, market actually suggesting that the current interest rate could be too low against the inflation that we have in Japan. So it's difficult to say exact level when going to be the breaking point to turn the impacting on the economy negatively, but we have already seen some negative impact because of this currency level. So from going on, it's in the short term we expect the Japanese yen could weaken further, but we also could expect that maybe the intervention from the government. So I do expect that there will be no excessive, disorder sell-off on Japanese yen, but I don't expect also that the yen appreciation is happening in short term either.
I'll just bring you some more news from the decision as well. The Bank of Japan saying underlying inflation to reach 2% target in the latter half of the projection period. I'm wondering what your expectations around inflation are at the moment. I mean, the December numbers that we just got seem to suggest things are stabilizing a bit.
Yes, I agree with that. So we have seen that the life price, for example, are getting lower, and we have seen some subsidies for the gas and the utility bills. So that would help to ease the inflation. So I think overall the trend itself, the inflation is stabilizing this year.
Now, you are, of course, an equities specialist rather than a bond specialist, but I do wonder that when you see a disorderly sell-off in the bond market like we saw earlier this week, what does that mean for broader market sentiment in Japan?
So, of course, I'm not a specialist on the bond side, but I would say any disorderly sell-off of any asset class would weigh down the investor sentiment. So, of course, what we have seen this week in JGB 40 years yield, for example, is certainly suggesting that it's sort of not alert level at this stage, but it's something that the Japanese equity investors also watching at and be mindful of any further move on that.
Well, let's talk about the equity side of things. In the environment that we've just discussed, where do you like to put money to work in Japan at the moment? I mean, banks seem an obvious play as rates normalize, but are there other sectors that you like as well?
So we do like industrial, for example, overall, and especially based on that the Takaichi going to win the election. We believe that her main policy to strengthen the domestic supply chain would benefit and would trigger further capex from the Japanese corporates. So I think there are a lot of domestic-oriented industrial names could benefit for that supply chain enforcement in next couple of years. So we do like industrials, but also at the same time, what we are looking at is a small cap and mid cap plays. The EPS growth in this market cap space is higher than the large cap space, and the valuation is very attractive. So we see a good opportunity, hunting ground in small and mid cap space as well.
And we've seen tech in Japan getting a tailwind from the broader AI boom. I mean, aside from some of the big names in that space, I mean, you mentioned small caps. What names are you watching when it comes to tech exposure in Japan?
So I cannot really give you the specific names, unfortunately, but just looking at the entire supply chain, and then also, one of the very hot topic is defense. So AI and defense, they're big, supply chains in the country. So there are some small and mid-cap names also could benefit from that trend as well. So I think, the industrials and the construction, for example, are really interesting place to look at.
Yeah, you make a good point on defence, although do you feel some of the valuations are getting a little rich there? Do you look at rotating out of that, or are things just getting started?
The defense as a theme, I think, is still going to play out, not only Japan, but also elsewhere in the world. But as you said that, some names, especially the large cap names, the valuation is very stretched at this stage. And, definitely you need to look at the delivery capability of the order as it building up. So I would really be cautious about the valuation and be selective. But as I said, the defense is really have this, the big supply chain. So I would look at, different names which still are undervalued, but also have some exposure because of this order coming up in defense area.
All right, Hiromi Ishihara of Amundi, Japan. Thank you so much for joining us today with your analysis. Just to recap those lines from the Bank of Japan. Of course, no change to the headline rate as we expected. That stays put at 0.75%. But the vote was interesting. 8-1 to keep rates unchanged. Presumably the one favoured some tightening there. The bank saying it intends to keep raising the rate if economy and price outlook is realised. Price trend seems to be in line, like inflation getting to 2% in the second half of the outlook. But perhaps unsurprisingly, risks to this outlook include financial and forex markets, and we do have the yen pretty weak, 158.65. Plenty more ahead. This is Bloomberg.
It looks like we have the concept of it. It gets everything we wanted, including especially real national security.
On Arctic sovereignty, we stand firmly with Greenland and Denmark and fully support their unique right to determine Greenland's future.
The process of getting to that agreement has clearly damaged trust amongst allies, long-standing allies with deep friendship and partnership. That's been the very unsettling thing about the last few days.
I think that what's going on is really a change of the world order.
Every country is entitled to defend its legitimate rights and interests.
We consider the people of the United States not just our allies, but our friends.
World leaders in Davos weighing in on Arctic security and shifting alliances. NATO Secretary General Mark Rutte says a breakthrough with President Trump over Greenland was secured without discussing the territory's sovereignty. Speaking to us in Davos, he said the talks focused on the broader issue of security in the Arctic.
President Trump has been clear from when he was in office, Trump 45, also when he came back into office, Trump 47, that when it comes to the protection of the Arctic, with a priority on Greenland, we have to spend more energy, more time, more focus on this, because we know the sea lanes are opening up. The Chinese and the Russians are more and more active. So what we discussed last night, how in a practical sense we can get this done, and we agreed on these two tracks. One is the 7 countries in the High North, including the United States, working together to protect against any adversary. So that will be something where NATO is heavily involved. And then when it comes to Greenland specifically, continuing the discussions they started last week. The Danish delegation, Secretary Rubio, Vice President Vance in Washington, to continue that discussion. Also to make sure that when it comes to Greenland specifically, their economy, their military situation, Russia and China will never get access.
And the Danes and sovereignty, is that all assured?
We didn't discuss at all about that issue. So we discussed how can we protect Greenland, how can we protect the wider Arctic region. And again, I think President Trump was the one who reinvigorated NATO at the summit in The Hague with the famous 5%. I think we can be thankful for the fact that he again has been able to take leadership on this issue. How can we collectively protect the Arctic?
The latest rumours out there that it will be involve sort of bigger bases, longer leases, but not actually changing sovereignty, and the idea of far more American troops. Is that the sort of basis of it?
We didn't go into those details at all. We know that the Danes are completely open to having more American presence in Greenland, and Greenland is open to that. And I think it is good that these discussions take place with the three of them, because at the end I cannot negotiate on behalf of anyone. I was listening to a lot of people. I think there is a landing ground here, but in the end, of course, now we have to make it happen.
That's NATO Secretary General Mark Rutte there, speaking in Davos to Bloomberg's Editor-in-Chief, John Micklethwaite. Right, let's take a look at how Japan assets are tracking, because, of course, we got the news we were waiting for from the Bank of Japan, and it was very much as we expected as well. The rates remaining unchanged. There was one dissent, the board member Takata arguing for tightening, eventually voted down 8-1, but the Bank of Japan saying that key risks include financial and forex markets, inflation seen getting back to target in the second half of the outlook period. We've got the yen still very weak there at 158. Tell you what's not weak, gold and silver continuing on their incredible run. Silver now closing in on that $100 an ounce level, 5,000 within sight for gold. More to come in a moment. This is Bloomberg. Welcome back. You're watching INSEAD. We've heard from President Trump typing, speaking, doing something on Truth Social anyway, communicating on Truth Social, talking about TikTok. He says he's so happy to have helped in saving TikTok. He says he would also like to thank President Xi of China for working with us and ultimately approving the deal. So he says it could have gone the other way, but it didn't. All right, Asia Tech correspondent Annabelle Droulers joins us now with more on this. So, Belle, a deal reached after what feels like a very long time. What do we know about the details?
Well, I guess if it feels like a long time, it's because it actually has been a long time in this case. It's certainly a years-long saga here that finally seems maybe to be wrapping up. But essentially, what we understand is that a U.S. entity has been officially established now. And so this is really what is passing on that ownership of TikTok's operations in the U.S. to a new entity. So the people or the investors or the groups that are going to be part of this, you can see here that ownership structure. So the new investors are on the left. So that includes Oracle, you have Silver Lake, the PE fund, and then also MGX, that's an Abu Dhabi-based investment group. 5% is unknown. So these are all of the new investors that are coming into that US ownership structure. On the right-hand side, these are the existing investors. You've got ByteDance, it retains around 20% stake, and then also actually 19.9%. It's got to be under that 20%, but also around 30.1%. That's for the investor affiliates of ByteDance as well. And so these are existing investors in ByteDance. So essentially, that's the new ownership structure there that you can see. In terms of who's going to be leading this, so we have a man named Adam Presser, who's been with the business, actually TikTok, for the last several years, but he's going to be stepping into the role of CEO of this new entity that's being created. Shou Chew, of course, we know he's the TikTok CEO. He is going to retain responsibility as CEO for the otherwise global operations of the app, and he is also getting a seat on the board of this new entity. So just some of the headline levels, but certainly for the millions of users in the US, more than half of the states is using this app. For the businesses, for the big brands, the content creators whose livelihoods essentially depend on this social media app as well, probably can be breathing a bit of a sigh of relief.
So what is this new entity going to be responsible for exactly?
Yeah, so essentially what's happening here is that ByteDance is licensing a copy of the algorithm to its US operations. And so what the new entity is going to be responsible for is moderating the content on TikTok and as well protecting users' data. So it's going to be governed by a 7-seat board that's going to be majority American. Oracle, of course, we know they're the long-time cloud computing partner of TikTok. They're going to serve as a security guard that's essentially charged with making sure that TikTok follows the law. So is that going to be enough to appease the critics? Of course, at the headline level, really what sparked this initial fear around TikTok was down to the fears that it could sow social dissent. And so is that going to be enough? Some critics have already argued that the arrangement, because this has of course been mooted for several months now, but that arrangement doesn't actually adhere to the US national security law that was passed in 2024 under the Biden administration that actually forced the spin-off. We actually don't know if those critics are going to be looking to challenge the deal either. But for now, this is, of course, the latest that we have.
All right, Asia Tech correspondent Annabelle Droulers there in Hong Kong. Well, joining us now for more on this, Laila Khawaja, Research Director at Gavekal. Laila, I'm just wondering, well, thank you so much for joining us, what your initial reaction is to this deal structure.
Well, I believe the TikTok deal is actually US and China trying to find a middle ground to resolve a very complex issue involving sensitive technologies. And the final deal structure, I believe, shows concessions from both sides. So for the US side, right, the algorithm remain under the control of ByteDance, which is exactly what Beijing wanted. So ByteDance will be licensing the algorithm to the TikTok joint venture, and then we're yet to see how the joint venture can actually retrain the algorithm to eliminate the national security concern. So that's a big question mark. On the China side, I believe, there seems to be some sort of financial concessions because the deal has a pretty low valuation of around just $14 billion, which is roughly what TikTok US is making from advertising alone for the year. But still, I believe that the deal is great for China and also great for ByteDance because for China, it shows the appeal of Chinese technologies and also the fact that Beijing is not bending on its hard line in terms of technology export controls. And for ByteDance, I think it's also great because it's eliminating a huge geopolitical risk for the company's operations.
Yeah, well, previously China was quite resistant to the idea of a forced sale. Do you feel like that there was some sort of concession in this deal somewhere that we maybe don't know about, which helped get China over the line? Because even President Trump himself says this could have gone the other way, but it didn't.
Right. I think for Beijing, its main issue was involving the control of the algorithms, right? So Beijing's hardline has always been that they're okay to consider licensing the algorithms, but they're not okay with just giving away or selling the algorithms. So the deal structure shows that Beijing is able to keep its hardline, and then that's where kind of Trump made a concession. So I believe that Beijing's concession is more in the financial sense. So ByteDance is getting a lower valuation for the TikTok US operation, but then Beijing is able to keep its hardline on the tech side, on the tech export control side.
To what degree do you think this could be used as a template for future deals like this going forward? Or was TikTok just a one-off due to its scale and size?
Well, I guess that question depends on if Trump actually has a very coherent China policy. And I think there has been some sort of confusion because, on one hand, we see from the national security strategy that Trump is really adamant about, maintaining U.S. dominance, especially in the Western Hemisphere, without conceding influence to China in the Asia Pacific. But on the other hand, Trump seems to be also pretty open to the idea of, again, welcoming Chinese businesses to set up shops in the U.S. as long as it can bring investments and also bring jobs, right? So if that's indeed the case, if the Trump admin actually has a coherent China policy in regards to Chinese investments and Chinese tech, then I believe that the TikTok framework, where there's a joint venture structure with some sort of ownership mix, and also with technology licensing involved, that's pleasing to Beijing's requirements, then I think that framework could potentially work in certain technology sectors.
Well, we've got ByteDance still with a 20% stake, just under that, in this new US entity. Does it going to give it any useful leverage in terms of, how TikTok is, how it evolves in the US in terms of, product policy, ad spend, that kind of thing?
I think that's probably going to be in the control of the US investors in this case.
And how about the algorithm? You mentioned that before. Is it going to need to be retrained? Is it going to need to change at all? Or do you see that continuing to operate as it previously has in the same addictive manner?
Well, I guess, the one main thing, right, from the joint venture is that the algorithm that's being licensed from ByteDance will have to be retrained with U.S. data in order to eliminate national security concern. At least that's the rhetoric. But exactly how you actually retrain to, ensure the national security aspect of things, we don't know yet. That's a big question mark.
All right, well, I'll put another big question mark to you as well. Now that this ban has effectively been lifted, we have a clear path ahead. Do you see a potential for an IPO of the US version of TikTok? Absolutely. Now that the geopolitical risk is, being eliminated, then I think that's eliminating a huge obstacle for the potential IPO for the entity. So do you think this is the end of the issue now, or are there elements in this deal that could see problems ahead, or some sort of relitigation of how things are structured? I think
The only one concern I would have is that the algorithm, because ByteDance remains controlling the algorithm, and the algorithm is being updated periodically by ByteDance, right? So according to the export control laws by Beijing, every single time you do update the algorithm, then Beijing has to approve the export of the updated algorithms again. So there could be some hurdles in the future licensing of future algorithm updates. That may be a potential, place of friction going forward. And then, of course, the U.S., if Trump sees any further national security backlash from the structure.
All right, Laila, Khawaja, Research Director at Gavekal, thanks so much for joining us today with your insight. Still to come, Indian car maker Mahindra & Mahindra says it's planning to strengthen its presence in markets in Australia and South Africa. We'll have more on their expansion plans next in our conversation with CEO Anish Shah from Davos. This is Bloomberg. Welcome back. You're watching Insight. BlackRock CEO Larry Fink says the company is expanding its AI strategy with new capital and partners. Speaking to us in Davos, Fink also says he doesn't think there's any uncertainty about AI.
I don't think there's any uncertainty about AI. There's no question of hundreds of billions of dollars is needed to build this out. The CapEx is going to drive more global growth. How that is going to be dispersed and where it's going to be really dependent on each and every government. But I sincerely believe there is no bubble in the AI space. That being said, like in everything else in capitalism, there's going to be some big failures. Okay, we always see a rotation, and there's going to be some huge winners and some losers. But do I believe the needed capital to build out AI is one of the great opportunities for the world to come? When you think about the hundreds of billions of dollars of infrastructure that's necessary, countries are going to have to rebuild their grids. We're going to have to source new powers of energy. Last night at a dinner, we had an amazing conversation on how AI is going to change science and how it's going to improve human lives in terms of medicine. But importantly, there's a strong foundational belief that AI is going to accelerate new sources of power. And if we could have cheap sources of power, abundant cheap sources of power, maybe things that we can't even think of today through AI, imagine how that could lift the rest of the world.
You announced a big, actually, partnership with Microsoft that you've raised $12.5 billion as part of this, partnership to bankroll data centers.
Yes.
Like, when are you hitting 30 million?
30 billion, yeah.
30 billion. When's that coming?
Well, we announced 12.5. We're actively raising more money. We did already make an acquisition in Aligned Data Centers. The total enterprise value was $40 billion. But not only is Microsoft our partners, MGX of Abu Dhabi, NVIDIA is one of our partners, XAI is one of our partners, and so we have an incredible partnership group in building this out, and we are seeing more and more opportunity working alongside some of the best hyperscalers, and so we see nothing but opportunity, and that but we have to be judicious and we have to be thoughtful about it. But I'm very encouraged about what AI can do for humanity.
It's BlackRock CEO Larry Fink there speaking with Bloomberg's Francine Lacroix at Davos. Let's check in on how Indian markets are doing. Just opened for trade about a minute and a half ago. Kind of flat at the moment on the Sensex. The Nifty Bank Index very modestly in positive territory there. We've also got the rupee still very weak. Kotak Mahindra says the RBI has spent about $45 billion since October defending the rupee, but still has plenty of firepower left, perhaps another $680 billion or so in reserves. But questions obviously being asked here whether defending is happening at a specific level on the rupee or whether or not the plan is just to slow the depreciation. Take a look at Indigo shares as well. India's biggest airline reporting profit that missed expectations due to one-time charges from December's disruption and tighter regulatory oversight. Third quarter net income slipping to $60 million. A crisis in December leading to nearly 3,000 flight cancellations and stranding tens of thousands of passengers. Well, Indian automaker Mahindra & Mahindra is setting its sights on Australia and Africa for expansion. CEO Anish Shah spoke to us about the company's strategy and plans at the World Economic Forum in Davos.
The first step is to get that capacity and get a higher penetration of EV in India. By capacity, I refer to both ICE and EV here because ICE products also continue to get very high level of demand today. The second step is to look at a few key markets around the world. We have been present in Australia, South Africa, and Chile for many years. And these are markets where we will further strengthen our position, compete with all the global players, and hopefully get to a 10, 15, possibly 20% market share. Then we will look at phase 2, somewhat in parallel, somewhat after the first phase gets over. And phase 2 may be either Southeast Asia or Europe. And the US would be a little further down the road because for the US market, we need to again understand that market very well. We need to be local there. And when we come in, we will come in a way that we are fully ready to compete.
As you ramp up capacity, what kind of capex are you looking at? Where would you be investing in? Would you be adding headcount as well?
So we have publicly talked about $3 billion of capex over a 3-year period, and we are on track for that. We are in the middle of the second year at this point in time. In terms of ramping up headcount, yes, some of that will happen as new plants come in, and it will also help the ecosystem because our suppliers are ramping up capacity as well for us to be able to deliver this. And there's a very large ecosystem in auto that has a multiplier effect. So that will be a very big positive for the industry.
We talk about supply chains. We have to talk about rare earths. There's huge dependency on China. How do you see this playing out? And how do you diversify to ensure, I guess, stability?
So various countries around the world are looking at this right now. The Indian government also has laid out a policy for rare earths. And we do expect manufacturers to come in for rare earths. We will obviously be customers there. And as that happens, that will help de-risk to some extent. As other countries put capacity on board as well, that will help de-risk it further.
If you take a look at the conversations happening here in Davos, lots of conversations over geopolitics and the uncertainty of where it all might play out. How are you assessing the risks to your business?
So let me first just comment on Davos because Davos has always been a platform for dialogue, and this year's theme has been the spirit for dialogue.
Not seeing very much of that.
I would actually disagree with that point, Haslinda, because in various meetings that I've been in and some closed-door meetings, there have been open conversations. And there has been an attempt to understand different points of view. Solutions may take time, but at least as a platform, I really see Davos coming back in a very strong way to create that ability for folks to have that discussion. And that to me is a big positive. Moving then to your question on risks that we see, significant. We're seeing those risks across the board. Frankly, over the last few years, we were expecting them to abate post-COVID, and we felt we passed COVID. We are now looking forward to some peace, but that hasn't happened. And we see a lot of supply chain disruptions on a regular basis. You mentioned rare earths. That was obviously a big disruption. There are other minor ones that keep happening. The silver lining in all of this is that our teams have gotten stronger and more resilient. In some ways, if COVID hadn't happened, we wouldn't be prepared for what's happening right now. And we just continue to keep alternate options. We've moved our mindset from just in time to just in case. And the just in case universe keeps expanding.
Just in case is okay and is desirable until the bill comes along. It does come with a cost. How are you assessing how are you balancing?
And that's the challenge that our teams face, that you have to be careful about cost as well. But in many cases, the challenges in supply chain may not be as costly if you can find an alternative. And what I mean by that is, for semiconductors, we face challenges with semiconductors or with chips that cost $2. I mean, the cost of a car, that's really not very material. And in some cases, we paid 100 times that price. Right? But that still wasn't that material overall. Similarly for permanent magnets, the cost of that isn't that significant. If you can't get it, it is very significant because you can't complete the car. So we're not as worried about cost. It's about creating alternatives. It's about having the design be ready for accepting alternatives, because that's a tough part. If you have to redesign a particular component of the car and get approvals for it, it might take a year or two at times as well. So the design has to be ready for it. So these are the various things that are taking place right now. And yes, cost is impacted to some extent, but that doesn't really worry us a whole lot. We've been able to show very strong margins in this journey. The bigger challenge is, are we design ready and is it available?
India, of course, set to sign a trade deal with Europe, an FTA that's a long time in the making.
Yes.
Some say that concessions could be close to what we saw with the UK. How are you looking at the implications on competitiveness?
We have always welcomed competition, and we have gotten better because of competition. We've been written off as dead many times. In 2002, when Ford and Renault and others came in, we were written off as dead, saying we are not going to be able to compete against established and very reputed foreign car makers coming in. When the Koreans came in, we were written off as dead again. So that's happened multiple times in our journey. But every time competition's come in, it's made us stronger and better. And today we've got a great R&D center, we've got a fantastic team, and that gives us a confidence that actually it's good to have competition. It will make us better. And our objective is not to survive in India, but it is to really win across the world. And to win across the world, we have to be very, very good. So it's good to have the competition. We have 4 free trade agreements. And it's something that's better for everyone. What we've seen the government do very well also is to ensure that ecosystems in India are also built with it. It's about expanding manufacturing in India, making India the manufacturing hub of the world, because it's the lowest cost destination, because it's the best destination to have. And for that, ideally we would want to welcome all foreign car makers to India to make their cars in India. Right? Higher competition for us, but that's a good thing. And that's a good thing for the Indian economy. So that's the path we really have to be on.
And of course, on the other hand, that delay in the trade deal with the US, you've said before that the implications for Mahindra is actually very minimal. Is that still the case 5-6 months on?
So we do have assembly facilities in the US. From an overall percentage basis, it's a smaller percentage of our overall portfolio. And our overall portfolio is just going great guns right now, so which results in a minimal impact. I know there are some industries in India that have a much greater impact, and therefore hopeful that the trade deal is signed. India and the US have shared very strong relationships over a long period of time, and they've only been strengthened significantly over the past few years. So we just feel that it's something that we're optimistic about.
Still to come, we'll have more on the Bank of Japan's intention to keep raising rates if its higher inflation outlook materialises. UBP's Kieran Calder will join us next for a look at the market impact. Also, we'll turn our focus to India as it edges closer to a trade deal with the EU, while an agreement with President Trump remains elusive. INSEAD Professor of Economics Pushan Dutt joins us in about half an hour. More to come on the next hour of INSIDE. Welcome back. You're watching INSIDE, and we're bringing you live pictures now from the Diet, Japan's parliament, where Prime Minister Sanae Takaichi is expected to dissolve the House of Representatives and will kick off a snap election on February the 8th. So that would be a very short election campaign, just 16 days. It's also the middle of winter, so there is some concern that perhaps the cold could suppress the turnout. Inflation, very much top of mind for voters. It's top of mind for the BOJ as well. We'll get to that in a moment. December CPI today was a bit softer than expected, 2.1%, but the Bank of Japan did revise up its projections. Like I say, we'll talk about that more in a moment. But the suspension of sales tax on food hoped to be a vote winner for Sanae Takaichi, although that did unnerve the bond market earlier this week. Something of a gamble this, the Prime Minister seeking to expand her mandate. She is personally very, very popular, but we did have a surprise development with a new centrist party being formed, comprised of the LDP's former coalition partner, Komieto, and the CDPJ as well. So a bit of a wild card there also. So we're just waiting for that official dissolution of the Diet, which will fire the starter gun on Japan's election. Let's take a look at how markets are tracking meanwhile, because the other big moment we had out of Japan was, of course, the Bank of Japan decision. No surprises at all that the BOJ did remain on hold as expected, the rate unchanged, 0.75%. But if we take a look at some of the commentary, the BOJ raising its inflation outlook, as I mentioned, it's monitoring the impact of last month's increase as well, and of course the potential outcome of that snap election. Now, the bank did revise up 4 out of 6 of its inflation projections, reiterates its intention to lift borrowing costs if that outlook materializes, and also noting the risk to the outlook from the very weak currency, the Japanese yen holding on to its declines today, 158.62 at the moment. More broadly across markets, it is once again a modestly risk-on day. We've got most of the major indexes in positive territory. Gold and silver on the bottom right of your screen there, continuing to enjoy a moment in the sun, watching key thresholds for both those precious metals, 5,000 for gold and $100 an ounce looming now for silver as well. Well, let's get a bit more on the Bank of Japan rate decision now. Bring in economy and government reporter Yoshiaki Nahara. So the rate decision itself going very much as expected, but some interesting commentary here on inflation projections. How does the path ahead look for the BOJ?
Right. So, Paul, as you mentioned, that the rate was held steady, but at the same time, we saw some upward revisions to the inflation outlooks. That is probably the reflection of the board members thinking about weak yen, which is going to increase the cost of imports. And is that a good thing for the BOJ? Yes, in a sense that they will be able to stay on the course to keep raising rates gradually. But no, in terms of the impact on the economy, because the weaker yen is considered these days a more problematic material for the nation, because it can create further pain for the households struggling with higher imported costs of food.
Now, we are waiting, of course, on the press conference from Governor Ueda as well, where he'll almost certainly take some questions on the behaviour of the bond market this week. Is the risk of more disorder for JGBs now over? What are we looking at moving ahead?
Right. So the governor is most likely to be asked about that, and I think he will be very careful communicating every language to the market, meaning that if he says nothing, obviously, or repeats just what he said before, that may fuel some volatility to the bond market further. But at the same time, if he sounds so much involved trying to calm down and bring down yield spikes, then that's kind of seen as opposite to his intention of letting the markets decide bond movements. So he has a very tricky situation and needs a lot of attention to details to navigate the complicated scene out there.
Governor Ueda also likely to take questions about the upcoming election as well, and we've just got it official now. The lower house of parliament has been dissolved, so that election heading for February the 8th. So there are some policies being talked about by Prime Minister Takaichi here, particularly around the sales tax. How is this election setting up? Is she? It's a bit of a gamble. Is she going to secure that mandate, and what's it going to mean for fiscal policy?
Right. So she has decided to call a snap election very early. I think very few people had expected she would hold this election so soon. So meaning that she probably has some confidence to extend her coalition's majority. And to enhance her chances of winning, she decided to propose the suspension of sales tax on food for 2 years. But the problem is that she hasn't been able to explain clearly what would be the funding source, So that's a big question that bond market participants really want to know the answer. But in terms of what choices voters have, they may not have many choices, because if you look at all the other, opposition parties, they're calling for even more aggressive sales tax cut or any kind of tax cuts in general. So the direction for the voters is very clear. So it makes sense that bond participants remain nervous about the cost of fiscal spending here.
All right, economy and government reporter Yoshiaki Nahara there. Well, joining us now is Kieran, Calder, head of equity research for Asia at UBP. And Kieran, been a very heavy day news flows-wise out of Japan. I'm just curious, what's your allocation to Japanese equities at the moment?
For us, we have a neutral view on Japanese equities, which means fully invested in a balanced portfolio. But within that, there are some segments of the market that we like, and one of them is banks, and banks obviously benefit from the steepening that you guys were just talking about. And then we also like the semiconductor supply chain names, which are obviously integral to sort of the AI trade as well.
So let's talk about your view on banks there, and particularly what we just heard from the Bank of Japan suggesting, it's going to maybe bring forward its tightening program if inflation surprises to the upside. So what are your expectations around that in terms of stickiness of inflation and the likelihood of the BOJ tightening sooner rather than later?
So for us, our economics team thinks we probably got a cut ahead of us, possibly in March. Obviously, the inflation data was a little bit softer, but the weekend is very problematic in terms of inflation. As your reporter mentioned, imported inflation is an issue, especially with regards to energy, and this is also related to why we're starting to see some nuclear restarts. There's no choice, especially against the increased power demand from the likes of data centers in Japan as well as the rest of the world. So for us, we think that the steepening. We think the BOJ increases towards 1%. We think that the overall steepening of the curve is great for banks in terms of their business and also the continued re-rating of the sector.
So a move in March, but do you think the BOJ is moving quickly enough? Because we had another dissent today, and no surprising, it was Hajime Takata again, who's a well-known hawk on the BOJ. Do you feel that this tightening is happening quickly enough, considering the, by Japanese standards, pretty aggressive inflation backdrop?
Well, I mean, the Bank of Japan is extremely cautious, and they've even told us one of their goals is not to surprise or upset markets. So I think this is what we should expect. Inflation expectations and higher inflation expectations is a new or renewed phenomenon in Japan. So it's taking a while for even the Bank of Japan to adjust to this. So of course it's very, very slow, and terminal rates in Japan are going to be very, very low in any case. So, the economy isn't that strong. The real issue is inflation. So, they have been slow, yes, but they also need to be cautious, we think.
You mentioned at the start there that you're neutral on Japan at the moment. I'm just wondering if that would change if we see a thumping Takaichi victory on February the 8th and loads of fiscal stimulus. Would that move the needle for you?
Certainly that's, would be a positive outcome. So, I mean, fiscal expansion is a theme, we think, globally. So in Europe, really led by Germany, in the U.S. as well, and Japan. So if Takaichi wins, and she's obviously got a lot of support, especially from younger people, so if they turn out to vote, that could be positive. Then we would expect to see further fiscal measures, and that could be give a pretty good tailwind to the market. Would it cause us to become overweight? Of course, we have to pay attention to valuations. Valuations in many markets are not cheap, and Japan is pushing to new highs in terms of re-rating. But yeah, I mean, it's something that we would consider. But as I mentioned, especially select sectors, which are beneficiaries of some of the big trends that are going on, both domestically and globally.
If you talk about valuations and maybe some pockets of Japan are starting to look a little bit expensive, maybe we can apply the same thinking to South Korea at the moment. The Kospi's seen just a phenomenal run-up, and particularly some of those tech names. How are they priced at the moment, in your view, and how much more upside is there realistically?
Yeah, of course, also very expensive, but also part of the the global AI semiconductor capex build-out trade, which has brought all of those names to extremely high valuations relative to their history. But driven by demand that almost they can't meet enough demand for many of their products. We're talking about the semiconductor names regionally, TSMC as well. So we think it can persist. I mean, the big question is at increased valuations or elevated valuations, the risk of a negative earnings surprise for the share price is heightened. But at the moment, we don't see that as a that's not our base case. So we think elevated valuations can remain as long as earnings support that.
Well, in terms of negative earnings surprises, we saw one out of Intel today. Where do you place the risk of seeing something similar to that moment for some of Asia's tech giants?
Yeah, I think Intel is obviously a special situation, distressed situation, and lagging technologically versus its big peers out here in Asia. So we wouldn't think there's any read-through from Intel specific issues for the likes of TSMC or Samsung.
All right. So when you're looking at the tech investing landscape at the moment, what do you prefer? Do you prefer US, or are you more weighted towards Asia at the moment?
So we prefer U.S. in terms of AI capex buildup, but we also like that story in China. So obviously China is building a parallel AI landscape, and they've got their own large language models, which are almost as strong as some of the likes of Anthropic, et cetera, but much cheaper. And on the back of that, they're building out a whole domestic ecosystem. We've seen a lot of listings of some of the semiconductor names, domestic semiconductor names in China. So we like the AI capex theme, both globally and in China, and that they're sort of running parallel.
I'm just interested to know also if movements in foreign exchange are causing you to take a look at your allocations and weightings as well, because it does feel like at times that we're seeing a little bit of a race to the bottom in terms of currency markets, perhaps the exception being the Chinese yuan. So how is that informing your decision making?
Yes, I mean, obviously it's an overlay for us in terms of a balanced portfolio. We also have a view that the yuan could be, could strengthen from here, and we think that the authorities, that's the direction of travel that they want to see. I guess in terms of Asia, other big currencies in Asia, if we do get a reversal in the yen, if we do get that rate hike later on in the spring, that could be another big factor as well. But obviously, for us, it's an overlay rather than sort of the priority in terms of our investment targets.
If you're looking for something a bit more conservative in Asia at the moment, and I frame this in terms of all of the geopolitical uncertainty that we're seeing recently, where do you advise your clients to go for a bit more safety?
Safety. Well, I mean, Singapore is a market that we have liked. Obviously, it's not that deep, but the SGX and the MAS are all trying to change that a little bit. The currency is strong here. The economy is stable, and so that's one area. We also think that the sort of trying to replicate the value up program in Korea, which is a replication of what was happening in Japan, has been a positive for Singapore. So we would consider that a bit of a safe haven. But overall, we still think global tech is the place to be, and there's not a lot of global tech in Singapore.
All right. Just before we let you go, Kieran, I do want to get your view on this precious metals rally that we've seen as well. I'm assuming nobody's buying gold and silver at these levels, although they're still obviously catching a bid. I guess the broader question is, when do you unload? Because you don't make a profit until you sell.
Well, I mean, I can tell you we have clients that are still buying gold. We have had a positive view on gold. We've been overweight gold, especially earlier in 2025, as it starts to approach 5,000. It's the upside is getting a little bit more limited. Our commodities team has a target of 5,200 at the moment. So we would be sort of a buy on dips approach. Again, from them in terms of silver, we think silver, the sort of catch-up trade on the gold-silver ratio has happened, and given the heightened volatility of silver, especially compared to gold or to most assets, we would probably stay away from silver, but we still have a positive bias on gold. A corollary of that would be the gold miners in terms of stocks, and we have a positive view on gold miners as well.
All right, Kieran Calder, Head of Equity Research for Asia at UBP. Thanks so much for joining us. And we have plenty more ahead. This is Bloomberg. Welcome back. You're watching INSEAD. The CEO of Europe's only large language model player says believing China is behind in AI is a fairy tale. Speaking to Bloomberg in Davos, Mistral AI's Arthur Mensch also told us geopolitics are pushing global companies to diversify their providers.
It certainly is a growing topic, top of mind in the CEO's mind of enterprises, that their dependency to single providers when it comes to digital services might become a problem and is not a great answer to the volatility that we observe in the world. Yeah. So it's true in Europe, but it's also true outside of Europe. It's true in the US with certain accounts. It's true in Canada. It's true in the Southeast Asian region where we operate a lot as well. So we do see that the technology we've built and the differentiation of it, which is AI that you can customize and deploy wherever you want, is something that does resonate with the geopolitical events that we see.
Well, staying with the geopolitics, one of my colleagues spoke to the Anthropic CEO earlier this week, and on China, he thought that the idea of sending advanced chips there, and this is a quote, is crazy, and said it's a bit like selling nuclear weapons to North Korea. What's your view?
Well, I don't think this is true. It turns out that China does very well without NVIDIA chips. We've seen China rise on the open source front, and we have been at Mistral basically the spearhead of open source in the West, so outside of China.
Is China behind, though, the West?
China is not behind the West. I think this is a fairy tale. In AI, they are very much at parity. And the year ahead is going to be extremely interesting in that respect. We care about Europe maintaining its position, Europe maintaining its ability to train models, because we don't think that we should rely on open source Chinese models in very critical applications. So we need to be able to create our own models and to sell them to enterprises. So it's going to be very interesting, but it's a fairy tale that China is behind.
Let's talk about your own business. Do you have a revenue goal for this year?
Yeah, we do. We should cross $1 billion by the end of the year.
Okay, and in terms of CapEx spending, what are you factoring in?
We are about to do around $1 billion in capex spending this year on our Endeavor Mistral Compute, which is what we've done last year is to start and build our clusters and to fill some of the data centers we're renting with these clusters. The idea being that because we have the hardware with the software platform, because we know how to build the models and the applications on top, combining them with the GPUs is a way to get to a vertically integrated stack, AI cloud services that are competing with some of the other fully integrated providers.
Chinese Sino Biopharmaceutical says China's seen a rapid increase in clinical trial registrations. The CEO, Eric Zi, also spoke to us in Davos about his open-ended approach to deals in 2026.
Definitely, I think there's a couple of numbers that China is catching up with, soaring in the past decade from 5% of the total clinical trial numbers to right now register on, I think, 1/3 of global trials. So that's definitely a huge jump. And then from deals acquisitioning for out-licensing, last year I think is $130 billion USD plus deal size. So definitely that's huge in terms of total deal. I think it's coming out from like a talent dividends for the past years, and how Chinese government is encouraging innovation, is really giving out directions, and then is giving out a speed as well. So I think the other reason is because of the population basis. Like Chinese just have to do things at much faster and then more cost-efficient way to survive. So in the end, it comes to survival.
How much clarity do you have for 2026? How many more deals do you think we can expect?
We are anticipating not only M&As, but also out-licensing. So we have a lot of good molecules interested by big pharmas, by MNCs. And then we're also very open space. We don't necessarily have to do out-license to MNCs, but also maybe partnering with funds to fund the initiative of clinical trials overseas, as well as possibility of carrying out it ourselves.
Where do you see Sanae Biopharma in 5 years?
Definitely, I think we'll keep on doing what we're doing. Our strategy, I think, is very clear-cut. We're very focused in the areas that we're now in: oncology, hepatitis, surgery and analgesics, respiratory, and we're looking into right now because of the M&As and then cardiovascular, as well as metabolism, as well as immunology and some CNS. With this, I think we continue to focus on the areas that we were in, and then where innovative is driving. Because some of the TAs before, we see less of a breakthrough. So I think some of the TAs is just maintain, and then the others, I think, is like how we really develop it through it. So in the next couple of years, I think it's complete on what I just said, steady on your current strategy, operation, and then keep on delivering. And number two is like opportunities on M&As, out-licensings, and partnership.
Coming up, India edges closer to a trade deal with the EU, while an agreement with President Trump remains elusive. We'll get analysis next with INSEAD's Pushan Dutt. This is Bloomberg.
It seems that every day we're reminded that we live in an era of great power rivalry, that the rules-based order is fading, that the strong can do what they can and the weak must suffer what they must. And this aphorism of Thucydides is presented as inevitable, as the natural logic of international relations reasserting itself.
Canadian Prime Minister Mark Carney, acknowledging the limits of the liberal international order, his call for unity among what he called middle powers is resonating with many countries, including India, that are caught in the middle of the tussle between the big powers. And India's having to manage a tough balancing act as it tries to get a trade deal with the US, while Indian exporters grapple with tariffs as high as 50%. Some respite could come with the expected FTA with the EU, which is being touted as the mother of all deals. Let's get to Bloomberg senior editor Menaka Doshi now in Mumbai. So, Menaka, India's in a tough spot right now geopolitically, right?
Paul, find me a country which isn't in a tough spot right now. We walked back from the brink this week in Davos, with a gap opening up between the U.S. and its allies in Europe. And that fracture will have implications for India, both opportunities and challenges. But the one thing that India will be looking closely at is whether China seeks to sort of take advantage of that gap in terms of leadership in the world. I think the second thing important for India right now is, like you pointed out, that U.S. trade deal is still hanging fire. And this is a year of domestic politics, both for Prime Minister Modi as well as for President Trump. He's got the midterm elections coming up in November, and Prime Minister Modi has 3 very important states going to election this year. So it could be a year of even more entrenched positions when it comes to trade. And then the many other things that you referred to, Paul, which is we just came out of a very important state visit from the UAE top leaders. We're going into a very important meeting with the EU top leaders and hopefully with the deal to be signed after almost 2 decades of negotiation. And then there was that very interesting picture that came out of Davos where President Trump is signing the agreement for the Board of Peace. And you can see the head of Pakistan in that photograph. And I'm sure India's foreign policy bureaucracy will be watching very, very closely. It promises to be a very interesting year. For more analysis, I'm joined by Pushan Dutt, Professor of Economics and Political Science at INSEAD. Pushan, thank you very much for your time this morning. How do you think India is placed in 2026?
So I think India still has to do the fundamentals right, okay? So it has to focus on growth, it has to focus on employment. Yes, it is geopolitically on the back foot and it was hit by 50% tariffs, but there are certain nuances to it. So the effective tariff rate imposed on India is actually around 35% because there are lots of exemptions for goods in the agricultural sector. Right. In whatever is important for the U.S. supply chains, etc. India is also a relatively closed economy, so that's why if you look at the IMF growth forecast, they shaved off 0.5 percentage points, but now they seem to be revising it upwards. In the longer term, India still seems very attractive as a destination for countries outside because unlike China, it is a consumption-driven economy. So China does not do consumption. India does a lot of consumption, and also in the long term, it's the only country which provides the scale that Western multinationals might be looking for. So geopolitically on the back foot, but still, focus on the fundamentals, and I think they should be okay.
If I can press you on the geopolitical back foot for a moment, that definitely seemed to be the case last year when we had this falling apart with the U.S. Do you think, though, that India stands to gain a wee bit if this gap between the U.S. and its Western allies persists? It makes countries, especially in the European Union, keener to set up, more intense trade and security arrangements with India.
Yeah, so whenever, we get lemons, you think of lemonade. So I guess, something similar is happening here. But I think it's important to understand that, there are certain upsides to it. India's traditionally very, very protectionist, okay? It has never believed in international trade. And as you just said, it took 2 decades to, get an agreement on the free trade deal with the European Union. So, because of the Trump tariffs, it's actually been pushed into a sequence of trading arrangements with Oman, with New Zealand, with the European Union, which is the big one, and with the UK. So there might be, India might be opening up its market. It's actually liberalizing its insurance sector. So there are sort of pluses to it. But in geopolitical terms, yes, we are all sort of worried about the world. But, there's another aphorism, which says that, when the strong try to dominate the weak will try to get stronger. And we see this for every country, including India.
I know that there is no replacement for a trade deal with the U.S., given that it is India's largest market. But do you feel that the trade deal with the European Union, which hopefully will get signed next week, could help fill in some of those gaps?
So this is not first best, right? The U.S., of course, also is a very consumption-driven economy. Imports as a percentage of GDP might be low, but imports as a whole is very important for many exporting countries, especially in Asia, including India. So it's not so much of a replacement, just for India. This is a challenge that everyone is facing. So if you look at China's trade surplus of $1 trillion, it has mainly come from diversion of its exports away from the U.S. market into Europe, into Southeast Asia. And India will have to play essentially similar cards and think about, markets in the future. But the European Union, what is it that it's looking for? The European Union essentially right now, it is facing a massive second China shock. So it's trying to pivot away from China. And India is sort of the natural trading partner. What is India looking for? Well, it's essentially looking for investments and technology transfer. Much of this could actually come from China, but China has imposed quite heavy restrictions, like in solar panels recently. So therefore, the Indians will be looking to the Europeans for technology. So in a sense, it's a good match for both parties.
At this point, Pushan, what do you think are the odds of the India and the US finalizing or signing that trade deal?
With Trump, it's always impossible to tell, right? He does have certain core convictions, things like tariffs and Greenland, etc. But he seems to have sort of lost interest in the India-US spat which has happened. So I would not be surprised if there is another trade deal. India has been asked to join the Board of Peace. Pakistan has already joined it, so it hasn't made a statement. But I think that standing up strong to Trump, there are very few cases of it, but the ones who have stood up to Trump, whether it is Jamie Dimon from JP Morgan or China using its rare earths or even Mark Carney, it has not been a complete disaster for them. It's actually been much harder for allies who actually kowtow to Trump. They have faced the brunt of his wrath.
So in many ways, you're saying, Pushan, that, what Prime Minister Modi and his administration did last year, which is not bend to Trump's will, was maybe the right way to go about it instead of quick, easy first concessions. Is that your take?
No, so there are two things going on, right? So we have very few data points, but we have seen that, not all CEOs or political leaders actually have paid the price if they've, stood up strongly to Trump, right? So I think it's important to understand what his core convictions are and what makes him tick, right? So it's the Trump model seems more about praise, submission, paying tribute to him, which India, historically is not willing to do, and that sort of gives Pakistan an edge. At the same time, there are still ways in which India can charm and flatter Trump. And as long as the trade deal is being actually worked out in the lower levels of the government, there is a possibility that, that too might come through.
Okay, before I get to China and Pakistan, I have a quick economic question, Pushan, which is to say that, yes, I know India has come to these trade deals very late and under pressure. But yet, if you look at the full package of what India is trying to do, both externally in terms of trade relations, internally, an attempt to sort of accelerate reforms, what's going on with the currency, which makes our exports more competitive, do you think that puts India on a stronger footing this year than last, or not?
Well, no one is on a stronger footing when the entire international trade order seems to be collapsing, right? So we are, every country, including the US, which has, single-handedly triggered the trade war, everyone is on a weaker footing, right? But this essentially, again, so what should political leaders do, whether it's in India or whether it's in Singapore? Well, the first thing is that they have to wake up and recognize the reality. This is what Mark Carney was saying, that, you have to actually recognize the truth as to what the world actually is than what you wish it to be. And the second thing is that, therefore, the currency going forward seems to be essentially economic power, reducing reliance on particular countries, thinking about supply chain chokeholds, thinking about, export controls, sanctions, etc. So essentially building up resilience. We all thought that, Trump was an anomaly and Biden was sort of the norm. But now I think people are realizing that, maybe it's the other way around. So no country can just wait on 40,000 Wisconsin voters to decide its future.
So I guess my question is India doing more or enough to build that resilience?
I think so. So, there are certain things which they have done. Okay, in the financial sector, they've moved forward. They're pushing forward in the defense sector as well. There is a lot of excitement about startups and unicorns in India. The one place where I think India really needs to work on is still attracting building up a massive manufacturing base. Much of this investment is actually flowing to Vietnam, like it did during the first Trump 4. But again, there are certain good examples out there, like Apple. So they have to build up the manufacturing base. And one of the critical areas of reform is actually labor market regulations. They've done GST reforms, but they really have to make it easier to sort of hire workers, fire workers.
Well, in fact, I think India just did announce the implementation of 4 new labor codes. So that box in your list has been ticked. I want to come to 2 quick questions. We have just a few minutes to go. One is that, we've seen China watch all of this play out between US and Europe through the course of this week in Davos, very, very quietly. Over the last few months, India seems to have mended some fences with China. How do you take stock of that relationship, and how fearful India should be of China wanting to fill some of this power gap opening up in the Western world?
So, if you look at India and China, given its shared colonial history, given the fact that they're neighbors, geography still matters in this state, they should be natural trading partners, okay? They also have different kinds of strengths. So, China does production, does not do consumption. India does consumption, doesn't do production, right? So, China has technology to give. India has cheap manpower because, the low-cost wage workers in China, that story is over. So they should be natural trading partners, but at the same time, given the sphere of influence world that we've moved into, where the U.S. says that they're going to dominate the Americas, and China wants to be supreme in Asia. This is going to lead to tensions. They've also gone to a war, and there were other skirmishes and conflicts which have had a scarring influence on India. So building up trust is going to take a long period of time. It's not going to be easy.
Okay, a final question then on what India should make of Pakistan in that photograph with President Trump, signing this Board of Peace. No surprise there, but yet it does, in a sense, re-emphasize the fault lines in this part of the world and the backing that Pakistan has from President Trump.
So, I would not take the Board of Peace that seriously, right? Because it started off as a way to sort of, resolve the Gaza conflict and build up Gaza. And now it seems to have morphed into like a United Nations Security Council substitute, right? The rules are not clear. There is an entry fee of $1 billion, which eventually countries have to pay. The way I would sum it is that if you're Board of Peace, then join the Board of Peace. If you look at the countries which have actually joined versus the countries which have refused, like France, Norway, Slovenia, Sweden, there's a huge difference in the degree of institutions and the degree of democracy between this. So this essentially seems to be a club of countries trying to buy influence by getting into this club. Now, on the other hand, I could also argue this is basically, I think, again, what Mark Carney said yesterday, which is that if you're not at the table, then you're on the menu, right? So it's going to be difficult, but I'm not that optimistic. In 3 years' time, if Trump is gone, which is a big if, I think this Board of Peace will sort of fade into obscurity.
All right, Pushan, thank you very much for your thoughts this morning. We have yet to hear from Prime Minister Modi on what he makes of that invitation to the Board of Peace. And with that, it's back to you, Paul.
All right. Thanks very much. That's Bloomberg's Menaka Doshi there in Mumbai. Still to come on Insights, Indonesia's sovereign wealth fund, the Natara, says it's looking to tap global debt markets as it shifts from startup mode to large-scale investing. We'll hear from the CIO in Davos next. This is Bloomberg. Welcome back. You're watching Insights. Indonesian sovereign wealth fund, the Danantara, says it's ready to ramp up deployment of billions of dollars, as well as tapping global debt markets as it shifts from startup mode to large-scale investing. CIO Pandu Sharir told us more about their plans from Davos.
This is the first start of the deployment era. I think we are going to do close to 200 trillion rupiah that we will spend in a variety of projects, direct investment.
That's to be deployed, not yet deployed?
Some are already deployed, but we're not talking much about it because it may affect the market, especially in the public side, because we're also doing public bonds as well as public equity in Indonesia. We will probably start investing outside globally on the public side by second half this year as we're going through the process, selecting the fund managers. So anyway, for this first year, we're going to work through managers, especially on the public side.
Talk to us about whether there are plans to invest in equities, how that might look like.
Yeah, so public equity, we'll start with Indonesia first. To be honest, it's already ongoing. I can't tell you the amount because it may affect our public equity market. But this will progress. It'll get bigger over time. The second half, we're also going to start looking abroad because at the end, we have to look for returns. The absolute return is important. So it has to be in excess of our cost of capital. So that's kind of the paramount figure. And number two, on direct investment where it creates job, we're already starting. We already started with the waste to energy that we've already announced. We're going to do several announcements in February, March on direct investments in Indonesia that hopefully will create jobs. It'll be in several sectors. Healthcare will be a sector, the energy sector, renewable, downstream sector. So these are the three key sectors that I know is part of the president's agenda.
I just want to pick up on the equity market to talk about how the international markets will come to play second half of the year. Give us a sense of where that might be, because there is a rotation from the US to Asia.
Yes.
I mean, is that something you're looking at as well?
We're looking at it very closely because it's global, the mandate that we're investing. Obviously, developed market today is still a lot of the liquidity is, but there's been rotational liquidity in developing markets, both in our part of the world, in Southeast Asia, because of valuation. But you're seeing it also in China. We're also seeing it obviously in Japan and Korea. These are sectors that we're looking at very closely, both from public as well as in private markets.
And in the bond market, you're looking to issue more bonds, Patriot bonds too?
So Patriot bonds is just part of a funding mechanism where we work together with the leading business people in Indonesia. We already closed the first 50 trillion. There'll be more coming in soon.
How much more? Are we looking at
roughly,
2 billion?
Yeah, probably
3
close
billion?
roughly. Don't go higher. Go step by step, Haslinda.
So what would that be?
That will probably be closer to 20 trillion, roughly 1.5 something billion. But that will be the first set. And, from there, it'll progress. But don't forget, all these projects we will do, because obviously the cost is very good for us, right? We're also getting credit rating for all these bond issuance. So the governance is proper.
So you've gotten the credit rating for
we got the credit rating for all this bond issuance. We already got it because from Pefindo, which is our local, as well as Fitch. So it's a AAA rated. And we're going to do it, obviously, some for waste to energy, which we publicly announced, and other projects where it makes sense because we need a lower cost of capital to make it economical for our businesses.
Some are concerned that perhaps you're raising funds to help with the national budget. We know that last year the government spent close to the max legally. Might the funds be used for that?
No, I think our job is to make money. By law, our job has to make money. We have to create returns. So the way I define return, the way we define returns in Danantara, it has to be in excess of our cost of capital. And it's very simple. You look at our 10-year bond, 15-year bond of Indo-Govi, US, it has to be in excess of that. So there's a spread that we put. So for us, all of these is just a compilation of cost of capital, but all the project has to make economic and commercial sense.
We talk about deploying capital. We know that Saudi Arabia is interested in getting investments for property projects in the country. Indonesia, Danantara has expressed interest. Talk to us about the reasoning behind that. What is the thinking?
Well, Saudi and us are very close politically, as well as very important because that's where all of Indonesians go for Hajj. It's one of the Indonesians' dream to go to Hajj. We're also the largest number of population, percentage-wise, that go to Mecca. So when they opened it in Saudi, we took that opportunity right away. We're closed a transaction to buy a hotel and land called Tucker. That's the land that we've developed or buying and developing. We're also bidding on certain assets around Mecca that hopefully will have a good conclusion in the next few months. But we're very aggressively looking to invest in land, both in Mecca and the surrounding area.
And how much do you think you're willing to set aside
at least,
for?
In our view, at least $1 billion that we have to do it to make it meaningful, given how large the Indonesian contingencies that go there every year. So it just makes great business sense and strategically very important for us.
And given that the two countries are close, as you suggested, are there other projects in Saudi Arabia that might be of interest?
Anything that we've discussed actually with the Saudi government, we actually take go with them. What they think is strategic for them, we'll look at it. For us, this sector, we look at tourism. In a way, it's a cultural tourism, religious tourism, and also to introduce Indonesia to the world. One of the best places to do it, actually, is in Saudi.
That's Indonesia's Sovereign Wealth Fund CIO Pandu Sharia speaking in Davos with Bloomberg's Haslinda Amin. Before we leave you, let's take a look at how Japan assets are tracking. A couple of big stories to get you across. Of course, the Bank of Japan decision, no change is expected, but we did hear that it's reevaluating its outlook for inflation. 4 of the 6 inflation predictions, the bank of projections the BOJ follows, have been revised, and it says it will raise borrowing costs if that outlook materializes. The Nikkei better modestly by 0.1%. Yields ticking up a little bit, but we also had the Diet, the parliament officially dissolved, so it's underway for that election in Japan in early February. Gold and silver also ripping higher. We did, of course, have Goldman Sachs re-evaluating its outlook for gold to 5,400 an ounce. Well, we're getting very close to that 5,000 level. Silver also knocking on the door of $100 per ounce as well. Take a look at FX. Also, the yen still very weak, 158.56 off of the back of that BOJ decision, and weakness in the Indian rupee also persistent, 91.60 right now. Before we go, let's take a look at some of our guests for next week. We are going to be at the Asian Financial Forum in Hong Kong, where we'll be speaking, very timely, with World Gold Council Chief Executive David Tate. Also, JSW Steel CEO Jayant Acharya joins us to discuss their third quarter earnings, which are due today. But that is it for Horizons Middle East and Africa is up next. This is Bloomberg.